So hello guys, and glad to have you on board again today. Been a long time since our last educational update, so it is about time that we do such a thing. We still have to catch up on our usual schedule, which is the part 2 about trending context, but we'll save this one for later purposes. And today we're going to go off the road into another side topic, which is talking about Finviz, which is a very, very good website, especially for those of you who are trading the US stock market. It's such a shame that this market actually isn't covering the other worldwide markets, but it's just being US specified because that's such a masterpiece that I wish we could have the exact same thing, but on the European markets or eventually even Chinese market or whatever. It would be so easier for us to navigate the market with these things. So anyway, this thing is not magical, as this is a first for many of you. You might be going out there and thinking that this is the missing piece of the puzzle. This is where you should have been, but you simply knew about it, and this is going to change your life. From this day and forward, you would now have access to the underlying hidden informations you didn't use so far. So if that's what you think, and believe me, you are going to be thinking that thing at some point, you must put right now a limit to this type of thinkings, which means if you do think it that way, you're getting it totally wrong, and you're even going to destroy the actual useful potential of these things I'm going to present today. So big introductory warning today. If you're getting crossed the lines, and if you just use these things into an appropriated context, you are definitely going to end up wounded rather than feeling actually stronger. All right. So second introductory talking today, we're going to talk about advancing stuff in here. So this is not for beginners. This is for specifically dedicated to intraday traders. So if you're a swing trader, I mean, this is not necessarily going to be that much of a use. Some of the things we're going to be talking about today can be used in a swing perspective, but we'll make a separate video eventually for these specific purposes. So today we cover intraday trades, no more than that, and how to use technical information coming out of this beautiful piece of website in a reliable perspective. Okay, though advanced stuff, which means you must be mastering the strategy, because this is something that we add up to the strategy, certainly not something that replaces the strategy. It's more of advanced trader who are going to be taking higher level of risk, which means you're getting more professional on what you're doing, means you already have the basis. The basis means you understand the strategy rules, you understand the strategy context, and you know how to profit from them, technically speaking. You are just getting into taking more risk, appreciating the shaded gray areas more precisely, and therefore adjusting the leverage more precisely as well, which is what will make the difference from a very profitable trader to a simply just a profitable trader. All right, someone who just knows how to manage risk will do well and will probably stop losing money in the market when he truly masters these things. But more than anything else, if you want to increase the revenues, you're going to have to take more risk, and more risk means either you use more leverage, which is absolutely stupid, of course, or you manage deeper levels of risk taking. And this is what we're talking about today. One of those many ways that can lead you to increase risk taking slowly. All right, it's not a sharp increase in the risk taking, which would be assimilated to leverage, but just assessing what are the potential underlying risks. Sorry, North, I'm going to cut your microphone. You're having quite some glitches. All right, and by doing this, you are going to be more able to adjust the position sizing according to the real risk of the market, because you're going to have a much more precise feeling of that risk and perception of that risk. And that's how you significantly increase the revenues. All right, we're talking about something like going from simple to double, something close to it. So this is really where the secret is hidden, but of course this is not something you're going to get to master in just a day or two. It's something that you get to learn day after day by slowly getting more precise at assessing those shaded gray areas. But information is always what supports shaded gray areas. This must not be gut trading, because everyone is very good at gut trading, and which means I feel like I have to be more bearish today. Yes, but why the fuck do you do this? You should always be able to rely that into solid, reliable information. That's what we're going to be doing today. How to gather that information out of this big fucking mess and shitload of information you got right in front of you. Because like I said, and we're going to scroll over this thing all over again today, too many information comes out of this, and therefore too many details. What matters in here is not the detail, is how you process information out of this fucking big thing. I'm sorry about it. That's just an alert. We'll take care of it later. So if you're now thinking that this thing is something you can do on its own, totally wrong. Remember that this is something you add up to an existing strategy, certainly not something that replaces any of the things you've learned before. How and at which point of the strategy this thing actually applies for intraday trader. Remember that when I taught you how to intraday trade, gave you the basis rules of intraday trading, I told you about a simple process. Simple process being you take your chart, you have a look at the SPX cash market structure to figure out if there are underlying gaps or whatever things that might have been left behind. So you must be aware of those things because they are like technical magnets, and on intraday these things can significantly impact your short-term signals, and therefore you must be aware of those, but not getting any further than that. All right, it's not about figuring where the gaps are so we know what the price will do. No, it's more like whenever you go closer to gap areas, price stability will be altered, which means therefore your signals probably will be. It's the only thing we care about. And then you made your technical analysis in here. You get to a 1 hour charts to put major swing boundaries to your daily trades. And then you have a look at a 15-minute or 3-minute charts, eventually down to 1 minute or 15 seconds if you're really intraday scalper type of trader. And you do your usual fucking job using technicals, which means you have to assess what the market context is and how and where are the speculative areas corresponding to those contexts. So the areas in which you can work out your trading technical strategy, which still remains absolutely not forecasting the future, but taking statistical advantage, in which normally the market should be hesitating in those areas. All right, so what we'll be teaching today comes right at the first step. It's when you're making your technical analysis of background trades, we're going to add some spices in here, which means the answer we're going to give to the question we'll add in here is not just whether or not there are gaps in here, but what is in the what can be impactful today in the underlying structures of prices, because we're talking about stock market indices on the SPX, which means 500 values and stuff like that, all gathered together with different ratings and stuff like that. So we're going to get diving into this thing to go and seek for further information that can help us assess the risk management. The answer we reach out in the end is, are we going to be favoring bullish or bearish trades, and how we can make this sentiment evolve in an intraday session. It's not going to be a black or white situation. It's always shaded gray area when we go on more professional stuff, but it's also how you will get to orientate these things out of reliable, rational technical informations. Okay? So now that it's all set, are we all agreed on this? All right, everyone okay with the introductory speaking? 10 minutes, I know it's long. You know I'm a talky kind of guy, but I'd rather like you guys to go down safe in here rather than going dangerous. So I think it's all clear, but I hope it is. All right. If it's not, then let me know. But it's absolutely necessary that everything in here is listened to and understood. All right, moving on. So FinViz, like I said, a shitload of information that can be overwhelming at the first sight, and it definitely probably will be. But it isn't actually that complicated if you know what you're looking at. So what we're looking at first, think of it as a process, all right? Just like I teach you processes to get to analyze the market, you've got a process in here on how to analyze information coming out of FinViz. It is a very, very gorgeous tool because it definitely has been made by traders and for traders, because all the informations that are here are very, very well displayed, which makes them and makes the actual information coming out of this really easier to find, because don't pay attention to all those numbers or whatever. Like I said, it might be looking like an overwhelming type of information, and it actually is, because that's what the thing is about. So a shit ton of information to see the patterns emerging from random noise. Okay, all of this considering it like noise. And if you see markets and information the way I see it, you will see dark areas, things that don't nearly matter, and light areas in which things might be interesting, but it is coming out of the overall information. So the first one we process is this one. This area right in here is where we're going to get the global sentiment, but this is something you'll get elsewhere. This is not specific to FinViz, but FinViz is just getting you the most important things out of here. Sorry, you as well. I'm going to have to cut your microphone. All right, so what you get in here is a very clear and neat information of what goes on and what are the main topics that have been talked about recently, and probably the ones that will move the market on today's session. So as you have a look, Sino US, all right, China, it's all about China today, Hong Kong, so it's really all about it, all right? It's about these things. So what we're thinking about, and we're talking about China today. You're also going to have a look at economical data, but obviously we were doing it already, but you'll have the information right in here as well. But this is where you start. Forget about all these things. You're going to have a look at them later on. First of all, have a look at this and process the sentiments, and moreover, you will get yourself used to today's topics. So you know that whatever is about China or whatever is already in prices, pure and simply because we're already talking about it, all right? Which means these topics are totally pointless. Whatever stuff you're going to be hearing today about China is probably unreliable thing. So you know that what happened is not what we care about. What we care about is what will happen. Traders are always forecasting, not reacting. So this is things that have made the market react so far, which means this morning, this European session. So what the fuck is going to be important today on the US session will probably be something different. Okay? So you get used to the vocabulary so you don't pay attention and you don't give a shit to anything that comes out of China today, because it's not going to be a thing anymore. All right, first things first. Though then economical release, so you make sure you put the major economical release onto your charts as vertical line. Like let's assume, for example, you had a big economical release today at, let's say, 1 hour after the open. You would basically go out there, put a vertical line, all right, and say, this is my timing, this is the area in which information will be interesting. Okay, pure and simply, don't make it overcomplicated, does not need to go anywhere beyond that. Then next step is going to be having a look at these things, all right? These things right in here. Like you said, the most important information is not hidden, but it's not necessarily the one you would have had a look at immediately. So what we process out of here is yesterday has been a down day, okay? This is all the down days we've had, all right? So negative pricing, prices have gone to the downside. Most of the context just barely looks like a this is the intraday session. So the intraday sessions have been mostly neutral but bearish. I mean, we've closed lower. This is the intraday charts. So what we care about is what has been the market participation of it. What you get in here is the numbers of advancing and declining stuff over the knees index, which is a global thing, coming much bigger than the SPX. It's really more of a broad-based thing. So as you can see, stock indices have been going to the downside, and therefore totally normal, more declining stock than advancing stocks, which is absolutely normal. So what we look for in here is a correlation between these things, which is the intraday charts, and these things advancing, declining. All right, normally 99% of cases, 90% of cases, you will get a correlation, which means that prices are going to the downside and you obviously have more declining stock. But sometimes this won't be the case. So first information coming out of this, if you have bearish stock market on a day with more advancing stocks, you would be saying, all right, something doesn't fit the plan. This is not normal. This is a divergence. A divergence is giving you a reliable information. That doesn't tell you, okay, then obviously that means the stocks will do this. That simply means you have an information that you will be able to process later on. So you will know this thing. Most of the time it will be according to price movements. Sometimes it won't. So in here it is according. If it doesn't, that means you need to have a look at all the further analysis. What we can see in here is that some things are really staggeringly opposite direction, which means we've got far more stocks being above their 50% day moving average, okay? Just as we have a far more and pretty much quite the opposite signal for the 200 moving average. So now we can see that even if we don't have a look at the chart, we know that the midterm is totally blurry because we're below major moving average but on top of shorter term ones, okay? So it is a big mess, and not even knowing at the daily chart, we know that the context is, in terms of market participation, pretty hard to figure out. The last number is this one, which is very interesting as well. It's the numbers of stocks that are making new highs and new lows. We're not talking about, we're talking about 50 weeks new, 1 year low or 1 year high point. All right, which means yesterday was a down day. Normally, we should have, in a bearish market, more market participant making new lows. All right, because in the overall, remember that we're taking all these stocks. All right, so out of 7,000 stocks and a little bit more than that, we had 85 new highs as 21 new lows. So in here, we do have a divergence. It was a bearish day, but we can see that some market participants have been making new highs. Oh, well, that's something. So first, information. Information always comes out of divergence. It doesn't come out of looking at all those numbers. This is something we eventually will do in a stock picking perspective, but certainly not when we try to analyze and getting into shaded gray areas. What we're trying to see is some information coming out of this mess or not? First information we see, there is something that doesn't belong here. We should have more new lows than new highs in a down day. So something is questionable regarding this down day. We need to put an explanation to it. Next step, we have a look at this. This is a heat map, which is basically yesterday as a map of who's been gaining, who's been losing money yesterday. As you can see, most of the market participants have been losing money, but don't have a look at the detail. You must not be paying attention to Microsoft that been making minus 1.20%. What the fuck? We don't give a shit about this. What you give a shit about is literally, you would be trying to close your eyes to the point something will emerge. And out of this, just play this game right now and try to do this. What is emerging out of this? I would say, okay, something goes on in here. I see a big red area. I see this one, obviously, but it's Amazon on its own. So it's a single information. We don't give a shit. I see some red, some green in here, some green in there. And I would say eventually a little bit of red in here, and that's pretty much it. 4 informations. You don't need to have any more than that. All right, so red is concentrated in here. Otherwise, it's just some specific cases that are not reliable because they are specific cases. Okay, so Amazon, we don't give a shit. We see that there is some green in here, some green there. In here, quite some, but it's really overwhelmed by red on the oversight. So yeah, we do have something coming out of the technological sector, because what's great in here is that when you get to put your mouth over, it will lead you to the actual information. That's what's beautiful with this website. When you click on something, you immediately get to the reliable information. So click. Oh shit, I've been making 2 clicks. Give me a second. Jesus. All right. Okay. Full screen again. So here you are, and you can see, all right, I can definitely see that the red area is very, very concentrated in here. So technological subsector of semiconductors. And we can see that obviously the green we've seen earlier, yeah, it's definitely concentrated in this area, which is consumer cyclical, but not Amazon. So Amazon is a big game in here, but the other cyclical components are pretty fairly being paid yesterday as well. Oh, insurance sector eventually might be something that worth having a look, but not necessarily further than that. Remember that we first of all highlight reliable information from the gathering information, which is, first of all, we have a look at the sentiment or whatever, then we get to have a look at divergences between yesterday's session and the market participation, and then we try to look at the heat map to see if some things emerge, some patterns emerging, to see what we're going to have a look at today. So we can see that this consumer cyclical into specifically apparel retails is what has been heavily bought yesterday, but we're going to say consumer cyclical in general. So how do we get to more in-depth information? Because an information all by itself doesn't make any sense if you don't verify it. Okay, and it's absolutely necessary that you do such a thing. All right, sorry about it. So let's double click consumer cyclical, and this is where you get. Anytime you do these things, you're always going to go market cap and descending. So you get to have a look at what's most important in the sector, not necessarily. Otherwise, it's going to be alphabetically sorted, which is totally stupid, makes absolutely no sense in terms of analysis. We really want to see what's impacting. And then you're going to get to switch to charts, because that's where you get the broad vision. What's beautiful with this website is that you can get 16 charts in a single page with very, very much details, at least more than enough details for you to have a global analysis. Okay, each candle in here is a daily candle, so you're really going to have a broad vision of what happened yesterday in this sector. The information we try to see is, do we have a reliable context, or are we in the middle of nowhere? Is what happened yesterday significant, or is this total bullshit in the middle of a range, or whatever? Okay, so it's a really black or white answer in here. Are we into an interesting context that will have further implications in the future, or are we in the middle of nowhere and what happened yesterday is a totally bullshitty type of move? Okay, so what do you think about this thing? All right, so if you're making your usual technical analysis like, oh, this is a pullback, this is whatever, shit, you really got it all wrong. What have I told you? The thing you shouldn't be doing when you're having a look at FinViz is having a look at details. You're always going to have a look at broad vision. So do the same old thing, all right? Close your eyes, or getting to close your eyes, and try to figure out patterns. The thing we look at in here is not, oh, I think this is going there, or this one may be going there. No, you're making single analysis. What you look for is, are these guys having a pattern, a typical same type of price action, or are these guys totally scattered through through different contexts? All I can see in here is that there are many, many assets that have the same structure. Some are differing, but I would say these two totally the same thing. This one seems to be the only one in its game. This one is fairly retracing up to historical highs, but otherwise this looks like this, looks like this, looks like this. This one is pretty much like this one. So we would say this and this are a pair. All right, this one plays on its own, this one and this one and this one, and probably this one as well, but in a much more weaker perspective, and this one, all of these are behaving the same. And we would say eventually this, this, and this can be working as similarities. Okay, so these are bullish, these two are double topish. Where is the double topish one? These ones are doubles, and the other ones are behaving the same. So we can see that patterns emerge. All right, so out of these, we can see that some might be looking for reversals. All right, these ones are totally mature for a reverse. This one is pretty fuckingly overbought. This one as well. So these guys can reverse. These guys, what do you think they're going to be doing? These guys have way more room to retrace to the upside. Okay, so all of these guys have upside potential. All of these guys are very risky for a reverse. All of these guys are totally uninteresting. They're dealing with double topping structures, so we're not going to speculate on these. So what can we see? Some guys can go up, some guys can go down. I think we've got the information. Can we get a reliable information coming out of cyclicals? This is a real question. I would like you guys to participate. Do we have any reliable information coming from consumer cyclicals? Yes or no? Like I said, it's a black or white. We don't have to go shaded gray area. Do we take this information as something that matters, or do we take that information as something that is just random noise? Because some of the time you will highlight stuff that just doesn't matter. And if they don't matter, you don't have to spend that much energy into diving any way further. Okay, the answer in here is no. It's definitely no. Nothing emerges out of this. It's pretty much all the way scattered. And like I said, I've been spending way too much time analyzing this thing so far. It doesn't matter. So we move on. We don't waste any more time in there. We get back to what we've done previously. We return to home, or we return to the heat map, which is in here. All right, and we move on. So this sector, actually too much scattered. We don't give a shit. The context is not something we can care about. On the industrials, we can say, oh shit, aerospace and defense are some pretty bullish sectors. So we cannot necessarily go in here. Oh yes, we can, damn it. All right, so what I would say in here is that actually we're not going to be doing this. I'm going to teach you how to do it properly. All right, have a look at the global sector first. Okay, so we can say industrials, double click on industrials. All right, do the same thing. you put it by market cap descending, and you get to have a look at charts. So you get to have a look at the bigger participants of this sector. Okay, so here we can see trying to build pairs. All right, I would say these two can be a pair, and all of the others pretty much look the same. All right, so in here something emerges. We do have a pattern because many market participants are behaving the same, and just not these ones. Okay, and what we can see out there is that there is a lot of room to the upside for these ones. These guys are ranging, and so far they can go for this second ranging wave, and therefore they have an upward potential. So yesterday these assets have been bought and they have a lot more bullish potential. So do we have something we can take out of this? Yes, of course, we can take this as a reliable information. Now, go ahead. What do you think we can be doing with this information? All right, information itself is worthless unless you use it properly. So how can we properly use that information that the industrial sector has a pretty bullish correlation? It's still in a range, so we're not going to go bullish trending type of stuff, but we are into areas in which if the resistance ends up being broken, as you can see, many downward trend lines that can be tested at the current given time. If those trend lines are broken up, we'll release quite some bullish potential. This one still has a shit ton of oil. We'll be breaking this trend line to get to the next one. So they pretty much all have the same context. They're below trend lines, and if they are broken up, they can release quite some potential. It's not going to be crazy bullish trending potential, but just a retracing potential. Okay? So yes, but what do we do with it? Do we go further and say, oh, eventually we'll have a look at this one to see what we can do? Fuck no, detail. I told you, anytime you go detail means you're not properly using the tool. So what we're doing here is we have an information that is a correlated useful information. We stop bullshitting out there. We go back to our charts. And what we can do with that information is real simple. We're going to be using an industrial chart. How can you be doing this? You get in here and you type sector, and you are going to get a tracker for this US sector. Okay? You got the select sectors in here, all the trust on SPDR, SPDR. You'll Excel some things. These are the ones you want for the sectors. Okay? So here's where you want to find your thing. You want industrials. It's real simple. This is how you get it. Amex Industrial Select XLI. So go XLI and you will have a global broad vision about the industrial sector today. Can we actually process that information? No, we're not going to directly trade this thing, but we're going to be using this information on how to trade today. That's how we're going to do these things, okay? Then this is the second thing. Oh, sorry, we need to go back. All right, so what is the next area we cared about? All right, we said, okay, this could be a thing, all right? So we've seen that industrial is good. We have this last thing to say, all right? The technology sector, and specifically semiconductors. We can see that this is definitely this area that has been that have been destroyed yesterday. So double click on semiconductors. We go market cap and charts. All right. What can we see about it? Don't waste your time having a look at specific cases. Just have a look at the broad vision. Does this thing looks all the same? Fuck yes. There's not even a chance we go any way further than that. Just this guy is behaving different than the others, but all the others are pretty much in the same type of context. They are accumulating in a range. Some have some upward potential if they release to the upside. AMD might eventually be breaking up, but if it does, it's going to be a crazy bubblish type of thing. Others, like this one, has absolutely no room to the upside. It's pretty mature for a bearish movement. In here, all others are pretty much matured, which means might be looking like a triangle range. Okay, so there is a little bit of upward potential, but if we ever retrace the supports, very, very big danger. So what is the information that comes out of this? Yesterday's downward move are pretty dangerous for semiconductors. If semiconductors were at some point heading downward, most of them have a lot of room, and most of them have matured ranging triangle context. So if they go up, they can go for a second bullish wave and find some bearish opportunities later on. But if they ever break down, remember that we come from this triangle to the downside, so the major probabilities are to go to the downside afterwards. So if we break down semiconductors, there are a lot, like a shitload of money to lose out there for those who are buying these assets. So do we have a reliable information out there? Most of them are either mature range or triangles, but it looks like mature consolidative structure coming from major bearish moves. For the most reliable asset, like I said, it's not 100%. Some assets don't belong here, like Nvidia and AMD might be behaving quite differently, but all of the others have significant downside potential if they break a support. So semiconductors is something we want to have a look at. So we get back there and we add semiconductors. So we can take the SOX index, or you would have a look at XLK, which is a technological tracker, okay? But in here, it's specific for semiconductors. So I would suggest you use the SOX index, which is appropriate for this type of analysis. And there you go. Do we have some additional information you can process from FinViz? There will be a last one you can do, which is, after going out there, you can make just a simple analysis out of this thing, right? We terminated with this. Remember that. Out of the major thing, you don't give a shit about all of this. All you care about is sentiment, real quick, market economical data. Then you have a look at market participation. Then you have a look at sectorial-based analysis. And finally, last but not least, it's not an absolute thing to do, but if you want to go one step further, you can go dealing with the futures market in here, okay, and have a look at this, all right? We don't give a shit about that. Just look at this. Okay, and you're gonna look for this thing and see if they are some things that looks odd to you. All right, most of the time things will be normal. Like I said, we're not looking for normal stuff. We're looking for things that are unusual and that we can eventually process. So the thing in here is, I see something emerging out of this. Okay, so I would say stocks are pretty much in the middle. They're not necessarily neither bullish or bearish, but something really, really odd emerges out of this. I see natural gas going 9% and crude oil being the biggest losers. What the fuck is going wrong? I mean, energy sector might be pretty scattered today, so that's an information. These things are supposed to behave all together, so something's odd. Let's get to find out if that's relevant or not, so we can know if this information can be used as a risk management information or not. So we can use and zoom onto energy in here and have a look at this. What do we have in front of us? Quickly, all the charts we need. So what's good with this thing is you don't have your indicators in here. You're not there to make technical analysis. You're here because it's convenient to rapidly get the reliable information out of a big mess. And that's the only thing you must be processing out there. Don't try to go crazy complex. It's just make it easy. All right? Some have been going up, some have been going down. Try to find an answer to it. So natural gas was the bullish one and crude oil is the negative one. Does that make any sense? Yes, they have totally different contexts. So now you can contextualize the information you processed earlier. This guy in here is in a big fucking messy range, and it can eventually go to the upside, but it has limited potential because there are strong resistances out there, okay? Then the crude oil has a totally different thing. It's more like a value thing that is retracing and is now below resistances. So this one has a very limited upward potential. It's going negative because that's totally normal. But in both case scenario, that pretty fuckingly looks like a range. So it is not, absolutely not reliable out there. This information, you've seen more than enough. It's not important. All right, let's have a look at performance chart. Do we have anything in here that sounds unusual? All right, then we've got platinum emerging in here, gold, okay. Oh, but we've got palladium, copper, and this is not normal. So metals are scattered as well. Do we have something emerging out of here? We need to go for metals. Okay, so we go for metals, and in here, same thing, in just a click, you've got all the reliable information. This is the really, really big pro for this website, the accessibility, okay? So in here, do we see something reliable? Oh, fuck, yes. Oh, yes, we do. All of them are dealing with resistances, okay? And if we don't think that daily is enough of an information, we can eventually look for weekly and say, oh man, yes, we do have a hell of an information coming out of here. Palladium is pretty much going in for a digesting structure, so more of a triangle, but it's below resistances. So this guy can pretty much find a reverse pretty much sooner rather than later, as it can probably not break this resistance. So normally contracting structure in here looks like a triangle digesting this huge motherfucking volatility we've got out there. It has been a bubble and this thing totally popped off. All right, then we can see copper as a major downtrend and is now testing below resistances. So if this thing reverse, makes totally sense. We're already in a downward trend and we can go way further than that. Platinum, same thing. Big bearish move, retraced, 2 sets of waves. This is probably a third range boundary in here, so we don't have to go any way further than that. It means all of these guys can go bearish because all of these guys are into bearish contexts. Okay, this one is in the top of a triangle, so it's not the most important thing to either buy or sell. It's probably just stupid volatility. So this one, we don't give a shit. That's not an exploitable context. But we can see that all of these guys might be having some downward reversals. So they could reverse in the daily charts. So this is a reliable information. 4 out of 5 might be giving reversal signals. At least they are into reversible context. So I think we definitely need to have a look at metals. So how do you do this thing? You can type metals in here, have a look at indexes, and you figure out which one you want to get. The one I figured out in here is a NASDAQ OMX Global Gold and Precious Metals, which is going to be an index giving me quite a clue about what the market is going to be doing today. And I'm going to orientate all about this, which means I still make my job, my daily job, which is looking at my SPX, looking at the gaps, highlighting those things, all of those technical, reliable information that I can use to trade. Like I said, it's not something that replaces, it's something that adds on top of what I already previously taught you. It's just for those of you who want to take more risk. If you want to take more risk, you need to find a higher stake of risk management. This is one of the many ways you can do, and FinViz can be the most helpful tool to do it, to find correlation information out of markets. But like we said, we're not necessarily looking for correlations. We're most likely looking for divergences first, and then we look for patterns with those divergences. That's the process of analyzing information with FinViz. Don't go into details, and I know most of you guys and most of the unexperienced guys among the community will make that mistake of going in the details, and you will not just lose all the benefits of FinViz, you will more than anything else create some very dangerous cons into these things. So there are pros and cons with anything you can be using in trading, all right? I hope you understood that by now. So if you want to be profiting from FinViz, just take the reliable information out of this. On an intraday perspective, get it into the details, and you're definitely going to lose all the reliable information, not to even say it's probably going to lead you to bad decision-making processes. So this is not a deterministic approach. All of those things we put it out there, all right? These are not things that will lead you to trade, and I hope you really understand that. These are risk managers. The asset you trade is this one, which means when you have this setup, do you think I'm looking at this all day long and I'm looking at this when I'm trading? Fuck no. The most important thing, more than anything else, is do what you were doing before, which is doing your fucking job, highlighting your areas, highlighting your gapping structures, whatever, then making your 1 hour analysis to figure out where are the 1 hour supports and resistance contexts for swing traders, so you don't get to trade those ones with shorter time frame trades. And finally, you get to trade the 3-minute context, 1 minute eventually if you're more of a short-term scalper, or you get to follow these time frames as a reference to trade your intraday, okay? But when you get into the speculative areas of the intraday, why and how are you going to be using those informations we had previously? Like right in here, are we into a fucking interesting context? Fuck yes, we are. So that means in here, we would be in an interesting selling context. We're dealing with moving average. We do have a target. So something in here is important. It's something that can be traded in a 3-minute context. So we need to go there. Let's assume, I'm not making the full analysis. I'm just going quick in here. Let's assume that we have a selling signal in here. Remember that what we're doing in here must be put it in a context. You've been taking information out of correlation and divergences. So how do you use that? Remember, I already gave you the information earlier, but you probably already forgot about it. You're not going to be triggering trades with these things. You're going to risk manage. You're going to go shaded gray areas. Let's assume you have a selling activity in here, which actually at the moment we don't, but let's assume we have. What are we going to be doing instantly is now zooming out. This is a bearish thing, all right? We would be looking for selling activity. So what are we going to be doing? Remember that what we said is that if we sell, we must see semiconductors being under pressure. So the additional information we might be using is where the fuck are my semiconductors at the moment? If they are below resistances, showing some bearish signals as well, what am I going to be doing? I'm going to increase the position sizing, not triple it, but I will be going probably full risk management, which means I'm going to go for a normal, fully sized position. Eventually, even slightly increase the position if I have a strong confidence and the technical signals are real great. On the opposite thing, let's assume the market is now there into this supportive area, dealing with support context and stuff like that. Let's assume we're into an interesting context. What am I going to be doing? Quite the same thing, but this time I'm going to have a look at this sector. If this sector right in here is on the supportive area, then I'm going to be saying, okay, that looks interesting. So this one is a 1 hour chart, so I need to zoom out, to zoom in a little bit. But let's assume this one is dealing with this price area and showing some bullish signals. And I want to buy. All right, what am I going to be doing? I'm going to be saying, all right, this area might be supportive, so that is great. Or let's assume this thing has gone up in here and is pullbacking. Anything that is going to be on supportive area in here and showing some bullish risk management, okay, we're going to have to zoom in, have a look at the signals and stuff like that. But if you have a signal in here supporting prices in the same time, that would be great. And that would be a good sign as well if the semiconductors would be on supportive area as well. But we give more credit to the bullish information. The best case scenario would be all of these guys going in the same place. Like if you want to buy, but all of them in supportive area would be a good sign. All right. And remember that the metals we've been talking about is, you know that these guys can be a reverse. So you must be knowing that this context in here, probably a trend on the shorter time frame with its breakout in here, and we'll probably be doing the pullback. Okay. So in here, we're dealing with 4 hour charts. So we have a 1 hour bearish trend going on with metals. All right. Accumulations in here, breakout in there, divergence, and we might be pulling back in here. So pullback means we need to go at least 23% retracement. Let's figure out if we have done so. Oh, god damn it. 23% being currently tested after 2 sets of waves and a mature down and a mature range on the lower time frame. So this thing can definitely go lower today and make new lows. It's not going to be a very, very interesting thing because it's a final excess, but normally we know that we should go lower. This is still 4 hour chart time frame, so don't be too much in a rush. But this is more like, you know, if this thing goes down, it's absolutely normal. So you will have a look at metals and figure out if metals are heading towards supportive area, you know we're probably going to break them. Okay? So that's the same thing. If you have all those things on supportive area and the metals as well, you know that the metals are probably going to need to break first and eventually afterwards retrace a bit. So if you're going to buy, you're going to wait for the metals to break first. This is, like I said, additional information that can help you being more profitable, more precise with your risk taking, no more than that. That will require a little bit of experience, which means this is not an on-off switch. This is not, oh man, now I'm using FinViz, I'm a fucking god, so let's go all in. No, you're going to go slowly getting into being familiar with these things, and as you will get more familiar, you'll slowly but steadily thinking that you're getting better at assessing shaded gray areas, and you're going to start bending the money management with those additional information. All right? But go easy on this one. It's absolutely necessary. Yeah, things are moving. Like I told you, we know that today is going to be about another topic. So it was China this morning. This afternoon might be the vaccine or whatever. They're playing the game with the market. We don't nearly give a shit about it. Like I told you, we're into neutral ranging context, so market can rapidly move one way or another. Don't get too much, don't pay too much attention to the news flow. Eventually, we'll get something emerging out of this. All we can say is that actually, does it matter? We know that the interesting areas today, or at least the interesting areas of yesterday, which means totally can be today can totally be an absolutely different day in which the informations we pulled out of yesterday's session will totally be out of context today. But still, like I say, we need to use those information because yesterday people have been making big moves on those assets. Today might be a different story. If we're talking about vaccine, eventually the healthcare sector will be in the center of the maze. But we cannot process informations this way unless you do this one step even further, which means you do this analysis in real time. And in that perspective, you use the process we just used and you do it again in a live perspective, which means you're going to have a look at what the market is pricing in and out today. All right, you're going to look for patterns, and then you're going to go immediately looking at those patterns to figure out what are the market movers of the day. But don't get me wrong, most of the time, you'll know it by the end of the day, which is the reason why I'd rather like you guys to analyze what happened yesterday rather than going into analyzing whatever happens in the real time, because it's a very, very more dangerous type of things. It's really one step further. Whenever you'll be good enough at understanding and managing your way into what we've been talking about today, then eventually you can go one step further into risk-taking by trying to do it real time. But, I mean, at some point, going infinitely risk-taking is totally stupid. It's just getting into some safer areas. I would say coming from FinViz, using the information we shared is really the best way of using it. If you want to go one step further into risk-taking, I suggest you rather have a look at different areas. And you can see in here we forgot about something like, oh, medical devices. I haven't seen this pattern with the French guys because I wasn't paying too much attention, but medical devices, damn it, there is a lot of losses out there. So we should have done the job. So I haven't done this for the French guys, so instead of talking again with the same things, let's do the job. So in here, charts, all right. Oh, fuck me. Okay, so today, obviously, they're going to be talking about these things. Just have a look at these charts. So gorgeously beautiful. So patterns emerging out of this. Remember, we're not there to make some stupid analysis. Just 16 charts, the biggest market caps, and we have a look at this in a very, very simple way. Okay. So what is emerging out of this? Who's looking like the same? This is looking the same as this. Just like we could eventually use this one as well into this perspective. So that would be our three gangers, and then we've got this looking like this, 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 this, and this. Do we have a fucking pattern? Yes, we do. There are two guys, two major patterns emerging out of this. We've got some that are crazy over bullish, over bought, over whatever the thing that is, but it is really way too much bullish, way too much overbought, okay? And all the others are pretty much into more of a neutral stance, retracing, and they are all below resistance and pretty much being exhausted. So all of these guys, they have retracement potential. They have downside potential. Okay, so the overall structure in here is, okay, some guys in the biotech sector can eventually be bought, but most of the medical sector is probably retracing right now and has some further downside potential, just retracing to supportive area. We're definitely dealing with half middle areas of the ranges, which means this is not a guaranteed stuff, but we know that these things can be volatile, but we also know that we need to have a look at them. Okay, so today, if we want to use these informations, if you want to use just three information, you do as you want. But today, what I suggest is generally when you prepare your intraday session, you really want to be using this. And eventually, if you don't have multiple charts, you can just have a look at the broad-based. Okay, if you have the luxury of having multiple charts, then you can use multiple chart setups, like I said, or otherwise you simply switch. So you're going to be doing in here is, sorry, what is the sector we wanted? Medical devices. So this is healthcare medical devices. Okay, so health sorry, yeah, that was good. Healthcare, medical device. Okay, so normally we should have an index for this. Trust, no, this one is just healthcare. So do we have a medical device? So we're gonna remove healthcare just to go for medical device. Oh, medical supplies. So that would be pretty much, I think, the best things we can get as a tracker. This one will be the most appropriate. Large cap medical supplies. Yeah, that would be this. I think large cap medical supplies seems like the most appropriate thing for us. Yeah, this thing would be the one for us. I think, yeah, that would be the most appropriate tracker for us. So, yeah. No, fuck, I took the mid cap. So, Jesus. I think mid cap. Come on, give me the large caps. Oh, fuck. All right, dope. Medical device. Some medical supplies, large cap. Okay, so here is our index for this thing, which is once again derivative information. We don't trade this, we just have a look at what it is and what information that gives us in order to orientate our daily intraday perspective. All right, we go shaded gray area. Do we take more risk or do we take less risk regarding the derivative information we're processing from FinViz? All right, so I'm done. At least with the explanations and stuff. I hope this was clear enough for you guys to understand what you can take out of this, the pros and cons, the way you can profit from this, and the ways you can totally destroy your risk management if you're not doing it properly. If you're going into details and stuff like that, you're really getting all wrong. If you're staying with global convergence, divergence type of things, patterns and divergence type of stuff, things that shouldn't be looking like that. Obviously, don't get me wrong, some of these informations in here are subjective, which means you will get better at doing it the more you do it, and it requires a certain level of expertise, which means obviously if you're trying to go bold on this and being inexperienced, you're probably going to end up more wounded than rewarded for the risks you took. But despite that, all right, I hope all the warnings and stuff like that, you were aware about that. And let me ask you just a simple question, and I want you guys to answer. Is this understood? Do you get the point of what we just said today, or is there any area in which you need additional information and stuff like that? Okay, so that is definitely for you, Dimitri. You're totally the targeted type of people to use this type of stuff. If you are intraday trader, being intermediate level, probably yellow into Discord, and dealing with the SPX intraday trades, you definitely can profit from the informations we shared today. Okay. If you are a white guy just getting started, whatever, if you looked at this, thinking that you would find reliable information, just I hope you understood the prospect of today. It's more like, all right, you have the information that can be useful someday eventually, but this is not something you must be using right now. Focus on learning the fucking strategy. That is way more important. Let me just give you a quick example of what I mean by that. Is let's assume that we've got a 100% bar in here, all right, of what you need to know in order to take high risk trades. Remember that this bar has a parabolic skimming stuff, okay, which means at some point the more you learn about markets and potential areas that can help you in risk managing, and there are so many things. Remember that on top of this you can use volume profile analysis, market profiles, you can use shit ton of stuff to risk manage, but the more of these stuffs you pile, the less you actually profit from risk managing. Okay, there is a limit to everything. You cannot take unlimited level of risk, so there are limited amounts of risk to take. And let me be clear, like more than 2/3 of this is the strategy. So first of all, concentrate your energy into learning this before learning onto how to pile additional risk-taking side informations. Like the one I taught you today would be something you pile up that allows you to take slightly higher bits of risk, but certainly not leading you to very important stuff if you don't already master this. Okay? It's absolutely necessary that you get it. I cannot stress that enough. It's really absolutely essential and crucial that you focus most of your energy when you're getting into learning into trading, not getting into harder stuff and trying to skip steps and going farther and further than anyone else. Trying to go faster is generally leading you to wasting more time. All right, so if everything is okay in here, how much notice do we need to take to the weighting of the sectors? If a lot, is there a good site that gives this information? So yes, that's a very smart way of doing things. We must be normally using the weighting in the index, but it's not what we do in here, because that's something we're going to be talking in a different video, in which we're going to go using the basis we talked about today, but entering into some more details like weighting and stuff like that, getting into more pattern analysis and stuff like that when we will get to be talking about how to hedge a portfolio, how to do hedging strategies and stuff like that. I'll get to make someday a podcast about that, and this is where we're going to be talking about these things. So considering your question as or the information you questioned about as a bucket, this bucket is something that we're going to be using in a different way, in a different strategy. Totally reliable information, but don't place it into the intraday bucket. It's not where it fits. It's fitting into the correlation use, which is more about hedging and stock picking strategies and stock picking context. So not into this bucket, but we'll definitely use it later on. So good information, that's nice, you pointed out, but don't try to fit it in here. It doesn't make any sense. Or it could make sense, but it's not reliable enough to make a difference. All right, that's pretty much it. So bye guys, wish you a pleasant afternoon. We can use what we've been making today onto today's session because it's totally appropriate. So you can have a look at what we've highlighted today. Like I said, multiple way of you to do it. You can use multiple chart setups to do this thing, or you can use the watch list and create a specific watch list for your daily sessions, so you can rapidly scroll through the different assets if you just have one chart. So there are many ways to do things, just find the suitable ones, work this out, practice it. Don't use the leverage right now, but just try to feel the difference. Practicing will get you better at it. When you feel confident enough with these things, this is where you can actually play with real money management out there. Bye guys.